Hello and welcome to Follow the Money. I'm Robert Tan. Here we uncover the stories and strategies of how money really moves. Today we're zeroing in on the big economic question that touches every Filipino, from the rising cost of living to job security and even where to put your hard-earned money. To help us break this down, we're joined by Michael Ricafort, Chief Economist of Rizal Commercial Banking Corporation. Good afternoon, Michael.
Good afternoon.
Thanks for joining us. Welcome to the show.
Yeah, nice to be back and at least here at the studio.
Yes,
Thank
live.
you.
Okay, Mike, let's start with this. Inflation has ticked up recently. Is this mainly because of global pressure, or are deeper flaws in our system driving it today?
Well, it's just a normalization because it was unusually low. It was unusually benign. It's way below the BSP's target of 2 to 4% for 6 straight months. The latest of which is 1.5% in August. It was, well, the lowest was near the lowest in 6 years at 0.9%. And our estimate, the latest data, it would be around 2.1%. So it would normalize even for next year. For 2026, 2027, it could normalize to a little over 3%.
When you say unusually low, what would be the drivers to that, for that happening?
Actually, a lot, because there were non-monetary measures. The lowering of the price of imported rice. It's a concerted effort. The maximum suggested retail price, it was reduced, significantly. I think it's at least 15 pesos from the peak since it started like early this year. And the imported prices of rice also went down. The world price of rough rice is now at the lowest in more than 6 years, since 2019. And also, for more than a year, there was a sharp reduction in the import tariffs on rice, from 35% to 15%. So, everything was, El Nino ended more than a year ago, June of last year. So, we're coming from a high base. So, imagine you're coming from a high denominator, suddenly, that's why suddenly the numerator also being reduced. So, mathematically, that's why it's unusually low. It's even, the threshold of the BSP is 2 to 4%, so it's much lower than that. But now, in the coming months, maybe for the rest of the year,
it will stabilize.
Yeah, it would go back to 2% levels, and even the consensus estimates, the official estimates for next year, for 2027, it's going to revert back and normalize at a little over 3% levels, and then that is still acceptable. That's that's a little over halfway the BSP's official estimate. So that would still warrant further monetary easing, at least matching any future Fed rate cuts to maintain the healthy interest rate differential. Now it's 0.75, the BSP at 5, the Fed at 4.25, and if the Fed would cut by another 50 basis points total, or 2 quarter-point cuts for the rest of the year, that would be October 29 and December 10.
Yeah.
So there's still a good chance that the BSP could match it. And because, given these external developments, slowdown in economic growth, so there's a need for policies that would further support and spur economic growth.
That's true. Now, Mike, if you look at now the core inflation, it's also rising. Now, what hidden pressures should wage earners today be most worried about?
Well, if you look at inflation, of course, true, inflation may have slowed down, but there's still that year-on-year increase. It just happened that it's slower.
Because they're still feeling the pinch.
Definitely. It's still relatively high for, maybe except for rice, because rice went down for like 17% year-on-year at some point, but between 15 to 17% in recent months, year-on-year. Understandably, because of the non-monetary measures, everything cooperated with the normalization of rainfall, and of course, with that, there's a normalization of output. But we have to acknowledge also that on top of the normalization of the inflation, what would also bring it, there's some pickup in inflation because this time of the year, with a series of typhoons, the disruptions, of course, vegetable prices went up. As a
Yes, a
result
lot of
that.
issues hounding us today. So is that also part and parcel of what's affecting the economy today?
Yeah, and of course, we saw many regions already raising the minimum wages. And normally there's a tendency for many businesses and industries, if they have the flexibility to do so, to pass on the increase in labor costs, in minimum wages. And that
Into
would
their
translate
prices, yes.
to higher prices. That has been the pattern since 2022, 23, 24, and the average has been like between 6 to 7% yearly increase in minimum wages, and that has been the pattern. Whenever those take effect, prices suddenly are adjusted higher,
Yes.
if they can, and if it's possible.
Kung makalusot.
Yeah.
Now, if we look at the unemployment rate today, it's tightening further, or are we headed now for higher joblessness in the coming months in terms of what's happening today?
Well, the latest data, actually, just like many other economic data, they were adversely affected by the series of typhoons, storms, flooding around the country, July, August. So there's some month-on-month slowdown because there were lower number of working days. So, but beyond that, we have to look at the external factors. Of course, the slowdown in the world economy due to the higher tariffs in the U.S., the trade wars that would ensue, the protectionist measures. That's why the multilaterals, the credit rating agencies, they have reduced their world GDP estimates and in turn, indirectly also reduced Philippine GDP growth estimates. Although it's negligible, from about 6, now it's down to about 5.6 to 5.7 at least for most of them. That's a consensus. So, we need to acknowledge that some slowdown, especially from the point of view of the exporters. They would be the hardest hit around the world. The exporters here, especially that our total exports to the U.S., it's 17% of the total. That's our biggest
because of the higher tariffs, yes.
Yeah. And the problem is, the bigger headache is with other exporters around the world, especially export-driven and export-reliant economies. Other ASEAN and Asian countries are like that, and they have a bigger problem than us. Us, it's not that much. Our exports, goods exports, are 3 to 5 times lower than them.
Yes,
So that's why the adverse effect would be less on us. Our economy is domestically driven.
Yes.
About almost 70% of our economy is consumer spending.
Driven, yes.
And the domestically focused companies, of course, realistically, if they're not export-oriented,
they're not going to be affected much. But we still have much to discuss, a lot about also how to help the average workers, where to put their money. But we'll just take a short break. Follow the money. We'll be right back. Welcome back to Follow the Money. Still with us is Michael Ricafort, Chief Economist at RCBC. Now, Mike, let's now go to at the micro level, to the wage earners. When we look at food, housing, and utilities, which are getting costlier every day, how much of that pain comes from inefficiency and corruption, what we're seeing today?
Well, actually, of course, it's now moving towards, the sentiment has been adversely affected, at least for about 7 days. But now, third straight day of recovery also for the stock market, for the peso. Now, peso is stronger. It closed at 57,875.
Are we seeing that positive movement? Because now we're seeing parts of the government really trying to seek accountability and also trying to get to the bottom of what's happening in corruption that's happening in the Philippines. And when foreign investors look from outside also in the Philippines, is that also a good thing? That's why we're actually stepping up and moving moving forward from this?
Actually, it started with the SONA of President Marcos more than 2 months ago on July 28 when he said, "Maya naman kayo." At least that's where the anti-corruption crusade started. So it started from the top, and now, of course, we have seen noises, political noises thereafter, especially previous 1 to 2 weeks. Involving big names, exchanging allegations, and amid those noises, so suddenly, the markets, investors, they adopted the wait and see attitude as a matter of prudence. But of course, some of them wait, especially in the financial markets, and once they see the bottom, they grab the chance to bargain hunt. That's just like what happened so far. Since early this week. So, but the thing is, there have been questions also. First, would this be serious?
Yes.
Would there be, there are parallelisms. This is not the first time. Actually, during the past administrations, for instance, the late
Well, we've seen
Pinoy.
a lot in the past. Again, like you said, hearings also about corruption in previous administrations also, and investigations. But how is it different today with what's happening in the investigations today? And more people are now seeing this as, it's time, seek accountability, look for more transparency. And is the market seeing that as a good effect today?
Yeah, actually, it looks like they know what to do at the onset. Even the president has been very clear on the guidelines going forward. True, there may be some slowdown on government spending, especially on infrastructure, and because of greater scrutiny. Because if there would be risk of corruption, they would not push through with it.
But that it can also go both ways, right? If let's say there's more scrutiny in terms of where the funding in terms of infrastructure projects, now it also slows down. Let's say the core infrastructure projects that need to be done are slowed down. Is that also an effect on the negative side?
Yeah, we have to look at that because it happened, as I was mentioning earlier, during the late former President Pinoy, 2010 to 2016. We have seen some slowdown in government spending, especially on infrastructure, because that has been during the elections until he won back then. That has been the platform. That has been the priority: anti-corruption, the fight against corruption. So they were hesitant on spending, but the blessing in disguise there is that it fixed the fiscal side of things. It narrowed the budget deficit. It reduced the debt to the GDP ratio, and the country eventually got its first investment grade rating ever in 2013. So,
but where are we now?
But now, it's 63.1%. Well, of course, prior to the pandemic, it was 39.6%. The international threshold is 60%. So there would be a chance that there would be some slowdown, yes. That would be part of the realities that we have to, expectations also. That need to be managed, and but of course, there's a chance. There's also a need to narrow the budget deficit now and to slow down the debt in debt. So that's why it would help on the fiscal side of things. And eventually, if indeed there would be results, accountability, then just like in the past, there were.
Of course, that's going to be a good thing. Now, Mike. If we talk about corruption, let's say hypothetically it drops by even 20%, where would Filipinos feel it first? Do you see cheaper goods, lower bills, or more jobs?
Well, actually, all. Because why? If, now global regulators and even local regulators in recent years, they have emphasized in encouraging investors locally and globally to patronize governments, countries, companies, and other businesses and institutions that adhere to ESG standards. Meaning before they put in money Those are funds from all over the world. That's part of, well, if an issuer, a country or a company for that matter, if they adhere to ESG standards, meaning policies that are friendly to the environment, that's sustainability, social, that's human rights, friendly to people, and finally G, that's governance. It all starts and ends with good governance. So it's really the way to go, no choice. Because that's where the world is going. The rest of the world, foreign direct investments, foreign portfolio investment, ODAS, the official development assistance, financial aid, loans. So they would base it on that. And, if we increase the level of governance standards, everything would follow. All good things.
Of course.
Yeah, all good things.
Who wouldn't want that, right?
Yeah, no choice, really.
Yes.
It's good for everybody. It's good for the markets also.
Now, Mike, on your observation as an economist, looking at the current market situation right now here in the Philippines, let's say if a worker has savings of, let's say, 5,000, 10,000 pesos, where's the smartest place can they put it right now?
Well, now, given, of course, it's opportunistic. Well, of course, depends on the risk appetite. But generally, if you look very well, the fixed income market would present opportunities. But of course, the tenors do vary. Those tenors that they can manage in the sense that they can hold till maturity and enjoy.
More on a long-term basis, right?
Well, yeah, but not really too long. Because some people, they may need the money at some point.
True.
So it has to be managed that way. And at the same time, interest rates and bond yields, they come from the upper part of the cycle. And it's relatively favorable for them in terms of relatively higher yields. And it's a matter of locking in. As long as they can hold till maturity, they can eliminate and reduce the market risk. As long as they don't have to sell before maturity. And they get to enjoy in the U.S., here in the Philippines, they came from like 17-year highs, thereabouts. So it's a sweet spot, so to speak. And it's, of course, among the safest havens. That's one. Well, of course, there are pockets of opportunities like, we have seen bargains in the parts of the markets, like the PSCI. It came from, it's now at 6,100. It came from 5,900.
Yes.
And although we have to take it into context.
But that's, it's still, again, a wait and see, right? Mike, as a final note to those who are watching who want to invest, what would be your best financial advice to them today, looking at the state of the market?
Well, diversify. Yeah, that's number one. Because, there are many geopolitical risks, starting with Trump and, potential conflict around the world.
So mix it with high risk and low risk, like bonds and equities.
Yeah, the best performers so far. We can take cue with the best performers. Like gold is up by 47% since the start of the year. Just barely, we're not even, it's just 9 months. It's up almost 50%. And, S&P 500 in the US, it's up by about 13% year to date. And it has been growing like at least 20% every year, maybe except for from 2019 till last year. That's more or less at least 20%, except for 1 year, 2022. It went down by 19% because of the Russia-Ukraine war. But, those are the best performers. And of course, it's better to have also a mix of fixed income. Berkshire Hathaway, that's owned by Warren Buffett, they've been invested in cash. Well, near cash,
but
not
those are
necessarily cash.
Mostly international investments. But on the local scene, you seeing it as a good time?
Yeah, it is. Well, for long-term investors.
For long-term
investors. They have to be kind of, at least for fixed income, there are many opportunities there.
Kailangan mahaba pasensya mo.
For retail investors, they liberalize it, they democratize it. The minimum is 5,000, say, for RTBs.
But that's good advice. Diversify in terms of investment for those who are who don't like too much of a risk, and those who also want their money to grow in the short term. Mike, now let's go to our rapid fire questions. This is the fun part. You've done this before. Just answer yes or no. No need to explain your answer. Let's start with this. If prices keep rising faster than my salary, should I start eating my boss's lunch?
No.
Yes or no? No. Okay. Can underemployment really mean having 2 jobs but still being broke?
Not necessarily.
Is red tape just government's way of wrapping gifts we never asked for?
Well, sort of.
Okay, with the stock market still low, should small investors panic sell or buy more milk tea instead?
Well, don't panic sell.
No panic sell. As I say, buy low, sell high, right?
Yeah.
So it might, as you said, it's the time to buy.
Yeah, it has been, the index between 6,000 to 7,000 for the past 14 years. So, like that.
Okay.
You just repeat. Buy 6,000, sell around 6,500 to 7,000.
Now, if corruption dropped 20%, would Filipinos actually notice cheaper bills before cheaper beer? Yes or no?
Yes.
And finally, Michael, complete the sentence. Money is the root of all
Opportunities.
Ayun. That's nice. I like that. There's a lot of opportunity, especially right now with the market. Thank you, Michael, for your insights. And hopefully those watching find a way to invest their hard-earned money.
Thank you, Robert, and to your viewers.
And when talking about inequality and corruption, the words of former U.S. President Barack Obama rings loudly for every Filipino. To those who cling to power through corruption and deceit and the silencing of dissent, know that you are on the wrong side of history. Inflation, job security, and the rising cost of living, these are issues that hit every Filipino household. Beyond the headlines and data, the real question is how families, workers, and small investors can cope, adapt, and still plan for the future. From global pressures to local weaknesses, from the stock market to simple everyday expenses, the economic choices we face today will shape our resilience tomorrow. I'm Robert Tan. Stay curious, stay sharp, and always follow the money.